All right, today we're diving into a really powerful filter for stock trading. We're talking about a system that's designed to take emotion completely out of the equation and help you zero in on only the highest quality opportunities. Let's get right into it. So, have you ever felt that pit in your stomach when you're just staring at a chart? You're wondering, should I buy? Should I sell? Or should I just walk away? You're not alone. That indecision, that emotional roller coaster, it's one of the biggest hurdles any trader has to overcome. But what if you could just filter out all that noise? What if there was a simple, repeatable checklist that could turn all that guesswork into a calculated, high-probability decision? Well, that's exactly the system we're breaking down today. It's called the NPR trading test. Think of it as a three-step filter that's built to rank trading opportunities and focus only on the absolute A-plus setups. And the test itself is just brilliantly simple. N is for name the play, meaning you have to be able to identify a specific recognized pattern. P is for position, because where a pattern shows up matters just as much as the pattern itself. And finally, R is for risk it out. You absolutely have to have a clearly defined risk before you even think about entering a trade. So let's dive into that first step. First up is N, name the pattern. The whole idea here is that if you can't put a specific name to your trade setup, then it's not really a setup, is it? It's a hunch, it's a feeling, it's a guess, and we do not trade guesses. Now, what's so powerful about this approach is that you don't have to go out and master hundreds of different patterns. According to the source, a staggering 85% of A-plus trades come from just 3 core patterns. Let's meet them. So the most common one, making up about 60% of these trades, is the elephant bar. It's a really long price bar that just stands out from all the others. And this isn't random. It's literally the footprint of big money. We're talking institutional funds all moving in the same direction at the same time. You're basically following the elephant into the water. And here's why that is so important. An elephant bar has a 70% follow-through rate. Think about that. That means 7 out of 10 times, the price just keeps on going in the direction of that bar. Those are some pretty powerful odds to have on your side. Next up is the tail bar. Visually, it's pretty distinct. A small body with a really long wick or tail. This pattern is a huge signal that the market tried to push prices one way, but it was forcefully rejected. It's a classic sign of a potential reversal. And yep, the tail bar is another high-probability setup. It boasts a follow-through rate of over 70%. It's another statistically reliable signal that a change in direction is very likely on its way. Now, the third and most powerful pattern is the 180. This one is a 2-bar signal. Imagine a strong red bar going down, and then, immediately after, a green bar that doesn't just erase the red bar's losses, it actually closes above its high. It's a dramatic, unmistakable shift in control from the sellers to the buyers. And because it's such a clear signal of a massive power shift, the 180 has the highest probability of all 3, with an incredible 80% follow-through rate. When you see this pattern, the market is sending you a very, very clear message. Things have turned a corner. So, identifying one of those 3 patterns is your first check. But this second check, position for power, well, this might be even more important. It asks one crucial question. Where on the chart did this pattern actually appear? The source uses a perfect analogy here. It's like real estate. You could have a beautiful mansion, but if it's in a terrible neighborhood, its value just plummets. It's the exact same thing with trading. A great pattern in a bad location is a low probability trade, but a great pattern in a prime location, now that is an A-plus setup. So what are these prime locations? Well, the system focuses on key moving averages, those lines on your chart that show the average price over a certain period. A pattern that shows up right at these key levels, like the 20 or the 200 period moving average, is considered a super high probability spot. And this is where the system's true power really shines. Location acts like a probability multiplier. That 80% pattern, the 180, when it appears in a prime location, sees its success rate jump to a staggering 90%. The key takeaway is simple. Pattern plus position equals power. And finally, we get to the third and, honestly, the most important check. R for respect the risk. This is the step that protects your capital. This is the step that removes fear from the entire equation. No trade is ever taken unless the risk is clearly defined and totally acceptable. And this is a 2-part rule. First, you have what's called an event stop. So if you bought a stock because of a bullish elephant bar, your stop loss goes just below that bar. Simple. If the market invalidates that pattern, you're out. Then, layered right on top of that is your maximum loss per trade, an absolute dollar amount you will not exceed on any single trade, period. This quote from the source just gets right to the heart of it. When you know, before you even click the buy button, that the absolute worst case scenario is, say, $100, fear just loses its grip. Every single trade becomes manageable. You've neutralized the single biggest threat to a trader's success, your own emotions. Okay, so let's put it all together. The goal isn't just to find any old trade. It's to become a 3-check trader, someone who only acts when all 3 criteria of the NPR test have been met. Here is the entire system distilled into one simple checklist. First, is it a named elephant, tail, or 180 pattern? Check. Second, is it located in a high probability position? Check. And third, is the risk defined and within your maximum loss limit? Check. The source puts it perfectly. When you get all 3 checks, it's not a choice or a guess anymore. It's a clear, objective signal that the odds are overwhelmingly in your favor. There's no need to hesitate, no need to doubt, no need to second-guess yourself. Ultimately, this whole thing isn't about finding some magic bullet. It's about shifting your mindset away from emotional gambling and towards a disciplined, systematic process. It's about trading a plan, not your feelings. And that leaves us with a final thought to chew on. If a simple 3-step filter can bring this much clarity and discipline to a field as complex as trading, where else in your life could applying a systematic checklist help you remove emotion and improve your odds of success?